and welcome to the Banker's monthly preview of the June cover story. I am Barbara Pianese, Latin America editor of The Banker, and with me in the studio is our editor Joy McKnight, who wrote the cover story, which explains why the Chief Risk Officer role is now becoming even more critical. Joy, thanks for joining me.
Thanks so much, Barbara.
So how has the Chief Risk Officer role evolved in recent years?
What's so interesting is it's evolved in two ways. One is in terms of the breadth of the risks that they're looking at, and then two, and also the strategic importance of the role. So in terms of the breadth, like previously, the Chief Risk Officer would be looking mostly at financial risks, such as credit, liquidity, or market risk. But now the risks that they need to have oversight over and control of, spanned huge amounts more of non-financial risks. So we're talking about things like cyber risk, talent risk, the list goes on, but regulations, technology, digitization, the whole remit for the CRO has really expanded. But of course, that makes it also more strategic. A lot of people pinpoint this to after the global financial crisis in 2007, 2009, where the Chief Risk Officer actually, came into being. Before they were just sort of more business support roles, but then they actually became so much more strategic and have access to the board and also the risk committee. So that's been a huge jump. There's a big debate within the industry at the moment about whether or not the CRO should join the CFO, the Chief Financial Officer, and the CEO on the board and become a board director. The jury is out on that one at the moment, but I think that's an interesting debate.
Interesting. And what do you think are the key characteristics that a CRO needs to have?
Well, it's interesting. I was canvassing people around this question. And of course, there's a new skill set that's really needed, and you to have oversight of all these different risk areas. But a lot of people also were talking about, being, some of the key characteristics are like being forward-thinking, being able to act agilely, nimbly, to be able to react to these new risks coming together, and also the risks that are colliding, which is very important as well. When you think about climate risk, really has an impact on credit risk, for example. They need to have a good oversight over technology, so they should become technology leaders within the organization. They need to have the fortitude, they need to be questioning, probing all the time. And I think the other thing that someone brought up, which was very important, is that they really need to have a strong team around them. Because as one CRO pointed out, being that all-rounder that used to, be sufficient, it just isn't enough today. So you need to have people around you that have that subject matter expertise that can really give that extra emphasis and extra insight into those risks.
Okay, thank you. I think the team is quite a relevant point. And so that brings me to my next question, that what like a bank can do if they find themselves like a Silicon Valley Bank without a CRO?
Well, I think that was an interesting question. And I also was wondering, so I asked a lot of people about whether or not it was possible to have bring in an interim CRO from outside the organization for a very short period of time, sort of a bit like a guns for hire, and bring them in to be able to make sure that at least if the CRO leaves, at least you're covered in terms of that critical role in the time being. I have to say it doesn't seem to be common practice. I think one of the reasons is that, again, because of the complexity of the risk oversight that you need to have, and also the understanding of the organization, it becomes quite difficult just to parachute in and be able to solve maybe some of the issues that are going on at the time. And there also seems to be a relatively small pool of CROs, the talented CROs that they could bring in an actual to fill that role. So one of my interviewees actually suggested that maybe the organization, the bank, should be looking at another role, such as the COO role, Chief Operating Officer, or the CFO role, to bring someone from which has those kind of skill sets in, to be able to sort of, patch things over in the time being. I guess the simple solution for most organizations is to really have, again, a strong team, but also a strong pipeline of candidates coming through. and also succession planning. I think that is key for banks going forward.
Okay, thank you very much, Joy. You can read Joy's cover story on the June's issue of The Banker and online on thebanker.com. Thank you.